Let's dig into Netflix. We're going to dig into Microsoft, and we're going to take a look at Tesla stocks today because they're really at the forefront of the market as a result of the big move that we just saw out of Microsoft today with the AI subscription service that might be getting rolled out, and with the news or the upcoming news on their earnings with Tesla and Netflix. That's really going to be kicking off the big FANG tech stocks. So let's go ahead and dig into that right now. On Netflix, one of the things that you want to remember, it has had an incredible year so far. It's getting very overbought on the daily chart, and it's starting to break out yet again. We had an ascending triangle pattern. Let's go ahead and dig into Netflix right now. There we go. On Netflix, you had this ascending triangle pattern, really solid looking breakout there today. Now, early on, this stock was only one of the 8 big FANG tech stocks that were actually trading in the green. The other 7 were trading in the red. And then when the Microsoft news came out, it actually flipped, and then the rest of them started trading in the green as well, all except for Google and Amazon. But really nice ascending triangle pattern. You breaking out there. The problem with trying to trade that kind of a breakout, it would have been tempting to do so yesterday, but then when you have earnings in 2 days, where's the window of opportunity there? So it makes sense not to trade right before an earnings report. You also have this rising trend line that goes all the way back to the July lows of last year. So a strong July trend line. The problem with Netflix, as I see it right now, is that we're very much disattached from this rising trend line. You can see from October of last year, we had a big disattachment, and then it came back down in a very hard manner, going all the way from 378 in January, all the way back down to 301 in March. A similar situation here in July with what we've seen from May, where it bounced off of this rising trend line. Now we're at 476. I could see a scenario where we could fall back down to that level. So there's also a major support level going all the way back to April of last year, 2022. If the earnings disappoints, and Netflix has historically had some pretty bad earnings reports, not recently, but course of 2022, there was definitely some pretty rough ones there. It could pull back to this level at around 375. That would be considered a significant disastrous earnings report. Or if it doesn't even do an earnings report over the course of time. But that still wouldn't get you down to this rising trend line off of the July lows. Now, could it gap higher after earnings? Sure, and it could keep on running, goes beyond 500. That's very possible. But as traders, we're trying not to chase stocks that don't provide a good reward risk ratio. And the opportunity to have gone into it would have been yesterday, but because of earnings, that negated that opportunity for me to be able to get in long on it, or anybody that's really trying to manage the risk on the trade. Earnings for Netflix, extremely volatile session that follows or tends to follow. So looking at Netflix for the earnings, whether it beats earnings, whether it beats revenue projections, whether the forward guidance is good or bad, these are the levels that you want to be very cognizant of. First of all, if we have a minor pullback, perhaps there's an opportunity to play the bounce off of this ascending triangle pattern that it broke out of yesterday. That would be the best case scenario for a swing trading opportunity. If it gaps higher and keeps on running, there's really nothing to do. You can chase after it, but you're not going to be able to manage risk very well in doing so. Worst case scenario would be a disastrous pullback back down to this huge support level right there. I don't necessarily think that that's the highest probability. I think the best case scenario, or the one that seems the most logical to me, is trying to play this retest of the ascending triangle breakout. That would require about a 5.5% intraday dip. That's not where I would want to buy it right away. I'd want to see it be able to settle at that level and then try to bounce higher off of this support level right there. Also, big in the market today was Microsoft. Microsoft had a huge move. So if you were watching around the lunchtime period, you saw a massive about 5 to 6% spike. This came as a result of there being a news or expectation that Microsoft would be able to charge about $30 for a subscription-based model to their AI platform. And as a result, the stock added $135 billion in market cap within minutes. It was absolutely absurd. And it lifted the tech, which was actually trading in the red at the time, back into positive territory. So huge move out of Microsoft, and it lifted the entire tech sector and reversed all the FANG stocks as well. The craziness about that is $135 billion move is like equivalent to 4.5 billion subscriptions of this AI subscription model, which when you consider the fact that there's only about 7 billion people on the face of the earth, you're talking about like what, 2/3 of the people are already being priced into this subscription model. And we don't even know if it's going to be successful or not. We don't even know what it really looks like. But Microsoft went absolutely wild on this news. So let's go ahead and take a look at the stock going forward. Earnings isn't yet. That's going to be next week. But let's take a look at this chart. So this orange trend line here, this is what I had been watching for a while, especially coming into today, because it had held it going back to April, bounced off of it numerous times. But then in late June, it broke below it and it never really recaptured it. Yes, you had this one-off instance here, but it kept getting rejected off of this trend line. And even up until yesterday and on Friday, we saw where it just simply could not get back above that trend line. Then you have the news today and it just blows right through it. When you have these really big news events, technical analysis tends to lose a little bit of its importance, at least from a support resistance level, because it's not impossible. It makes it a lot easier for it to blow through those resistance levels that are overhead when you have a big positive news event or a news event that's received positively by Wall Street. And in this case, Microsoft just blew right through it. What are we looking at going forward here? Because would I want to chase at these levels? No, I didn't even think the chart really looked that good coming in. Now, obviously, the trend line was bad, but there was like this malaise that had kind of been cast over the stock over the past month or so, where it just wasn't going anywhere. And then even though today's like the 6th day in a row that it's managed to rally, the 5 days that preceded it, really it wasn't going anywhere. It was just not breaking down. There was an opportunity here a couple of times to break down this below this 328 level, and it just refused to do so. Going forward, you're going to want to pay attention to this rising trend line right here. So it's almost parallel to this orange trend line. So with the orange trend line broken, I don't think it really plays a huge role going forward. I think the biggest thing is to start paying more attention to this blue rising trend line that goes back to late March or mid-March. Does it pull back off of earnings? If so, that's a good opportunity if it can hold the trend line to play that bounce there. You also have a bigger trend line going all the way back to the beginning of the year, where really completely disattached from this one. We talked about how price can get disattached from a trend line, but oftentimes they'll come back and test that trend line. If the earnings are a disaster, I don't expect them to be, but also I don't play earnings because I can't predict the outcome of them very well, nor can anybody for that part. This would be like a worst case scenario if you pull back to this 313. But right now, if I'm wanting to get long on this stock, I'm really looking at this rising trend line going back to mid-March as a potential opportunity on a pullback. And the market's extremely oversold or overbought. You look at the Qs here, and if you put a layer of Bollinger Bands over the top of it, it doesn't look that great, guys. You can see 4 straight days we're trading outside of the upper Bollinger Band. That hasn't happened all year long. There's no other instance all year long where that's happened. And that's using 2 standard deviations off of the 20-day moving average. That is an extreme move that we're seeing unfold. And so over the last few days, it has made it very difficult for me to want to buy into some of these trade setups that I've been seeing. I've seen some good ones like with Deere, with NTAP, and I've passed up on them just because I wasn't comfortable getting in when the market's starting to get so overextended. Now, I have positions in my portfolio. I have plenty of positions, but I've been whittling them down essentially. I closed out Tesla today, and I closed out Honeywell, and I wanted to take profits on them because the market's getting overextended, and I need to be much more aggressive with making sure that I don't lose the profits when the market does pull back at some point in the future. So going back to Microsoft, let's go ahead and remove the Bollinger Bands here. And you can see very overstretched, not something I want to be chasing, watching for the pullback to the rising trend line. If it gaps higher after earnings, okay, so be it. We got a little time before the next earnings report comes out, but I don't want to be chasing it here going into earnings at 359. Let's look at Tesla here, okay? Tesla, I got out of that trade today with the earnings happening on Wednesday. I don't want to hold that stock through earnings. I think that's actually one of the stocks that there's really no scenario that I would hold Tesla through earnings as a swing trade. It's just very, very unpredictable. We've seen wild sell-offs as a result of Tesla earnings. When it comes to trying to manage the risk and the reward on a trade, trying to hold a volatile stock like Tesla through earnings, it's not there. So going into earnings tomorrow, what levels do we need to be cognizant of in terms of a pullback? What could it be trying to test? Let's look at the charts. Here on Tesla, you have this pullback opportunity to this rising trend line. Now, when I played it, I played this breakout right here off of the trend line. I didn't have a big window of opportunity because of earnings. So I wanted to make sure that I took advantage of any kind of momentum that that came as a result of this bounce off the trend line. I got it. I made about 4+% on, I think about 4.7% on the trade. Good trade overall, not a big window of opportunity. So I took what I could. What you really want to pay close attention to is this declining trend line. This is really should be our main focus going into earnings. This rising trend line, you can see it on the weekly too. It's even more pronounced on the weekly. You got multiple attempts where the stock has reversed off of this heavy resistance level. And this resistance level goes back to late 2021. Hasn't been tested since early 2022. But it's getting ready to have a date with it here very soon. You can see it's only like a couple bucks off of it. It sits at around on the daily chart, sits at around 299 or so. I would not be surprised to see that stock rally into that resistance level, and then all of a sudden the earnings report's going to decide whether or not it breaks above it or breaks back, starts a reversal to the downside. So far we've seen earnings be pretty well received in terms of stocks beating their earnings and on the earnings and revenue side, the EPS and revenue side, but you've seen some pretty rough reactions to it. You take, for instance, LMT. Good earnings, they beat, hard rejection, hard sell-off there as a result. So there's a lot of others like LMT that I just showed you when it pertains to the earnings. So Tesla, it's up 6 straight days in a row. Earnings reports way too volatile for me to play, but I think a lot of it's going to hinge on how is the earnings report received, and then how does it react to this huge, massive trend line that goes all the way back to 2021. Now, I want to go ahead and look at some of y'all's charts here. We have a number of you guys in the room already. So let's go ahead. If you guys have any questions that you want me to look at, let's go ahead and take care of them here. First off, let's see, Kevin, thoughts on APPS and FIS? Yeah, let's go ahead and take a look at both of those here. And again, if you have any questions, charts that you want me to look at, post them in the comments. I'll see them, and we can tackle them one by one. APPS. All right, so you have a really good base, and it broke out, what was it, back on July 11th. Not a bad look there. And then if you missed it, you have to kind of wait for a secondary trade setup to come about. Now, APPS is in this gap here. So that's a positive thing. It's trying to fill the gap, and now it's consolidating some over the last few trading sessions. So what you can make the case of, you can say, oh, maybe it's a bull flag pattern, or maybe, if you wanted to draw it like so, yeah, I could get behind that. That you could say that's a bull flag pattern, or you could just say it's like a continuation pattern as well. If you wanted to take some of these put more of an emphasis on the candle bodies more than the shadows, it works too. The big thing is that it doesn't really matter whether you see it as a continuation triangle or a bull flag pattern. They pretty much work the same. They're both like breathers within an existing trend. So let's go ahead and just call it a bull flag pattern for right now. But the way I would play this one would be to wait for a breakout of 1119. That's about, what, 2.5% away or so. So if it can break above 1119, then where's the stop loss go? And that's the trickier part, because then you're getting into a stop loss probably below 1038. I don't really see where else to put it at this point, outside of maybe putting it below the lows of the day. Maybe that could fly, but I think that there's a higher chance that you get stopped out at a stop loss just below 1069, but you're also keeping the risk a lot tighter. So you have to kind of weigh that balance between how much risk do I want to take on versus what probability am I okay with the stock not working out versus, I mean, if this stop was to be taken out right here at 1038, you would be wishing that you put the stop loss at below today's lows, which would be around 1069. So that's the pros and cons. If it's me playing it, I'm probably putting it below this one just to be able to keep the stop loss as tight as possible. Because like I said, you're getting into like, you know, a much wider range there if you start going below the lows from Monday. Let's look at FIS. FIS. Nice consolidation here. One of the things about Kevin's the one that's popping these ones up. He comes up some really good charts here. I've noticed over the while that I've known him, but he's comes up with really good basing pattern here. Nice consolidation. You got this 200-day moving average where it hasn't necessarily had a hard test of it in a while, but the last time it tested, it got kind of close to it, and then it reversed back on February 2nd. So we want to be cognizant of that, and it's yet to really push through it. So I would probably say you got with this box consolidation here, wait for that break, not only of the box consolidation, but a close above the 200-day moving average. And then stop loss wise, I think the stop loss, unlike APPS, I think you can make this one a lot tighter. And they're both tech plays too. Probably below the lows from 710, which would be about 5808. It's not that there's anything significant about July 10th, but it's just it falls a little bit further below the other candles. So I try to get the lowest of the candles on the existing pattern, and this consolidation, this one looks the best. So 5806, entry price above the 200-day moving average, which it'll fall tomorrow some too. That would be probably, yeah, this is actually a 250-day moving average. So let's change that one back to, I was using that the other day. So so I would actually probably wouldn't even wait for the 200-day moving average. I would probably go ahead and play this breakout here. So that changes the parameters a little bit. You got to remember to change them back, the moving averages. I did not do that there. Let's see, high 60, 56. Let's go 60, 50. Yeah, I'd probably wait for 60, 56 to get broken and then put my stop loss. Probably I just put it below 5808. So not a bad looking chart at all. I'll add that one to my watch list as well. FIS, write that sucker down. Can I take a look at coin? I got in on the 55 break, sold half. Pull that chart up for you there. There we go. 55, sold half at 110. Good grief. That's a great trade, Black Mamba. Stop loss 99 for the rest. Okay, let's dig into this one. Golly, really good trade. So you got in at 55. That was like actually before they'd even broke out, really. Golly, that's really good. So that worked out. It all at like 71 or anything, crushed right through that. So right now on coin, you have a bull flag pattern on the chart. So that's positive. It's only a 3-day pattern. Ideally, it'd be great if it could form a couple more of these doji candles before it broke out to the upside. Then you could really be getting into a really nice push to the next level. Let's see here. Stop loss at 99. Yeah, I could probably. Yeah, so right now, yeah, it's probably not bad to have it at 99, especially as you have a little bit of a decline right there. But if it breaks out to the upside, then I might be tempted to just goose it up a little bit more to like 101.20. That's what I would do if it breaks out to the upside and can hold it. Because what we've seen here over the last, you can even make this a little bit of a tighter consolidation. What we've seen, shoot, let's make it a little bit tighter, right? I don't know. Those shadows are kind of large, but we need to see some kind of a breakout more than just a doji candle here. We need to see maybe a push above this like 106, 107 level to get a good feel that it's trying to break out to the upside. Once it does that, then I think I would be raising my stop loss to below 101.22. But yeah, I think you're doing a good job here. I mean, you've got a trade that's gone from 55 all the way up to 104.59. That's amazing. You should applaud yourself for that. If it starts to fall off, starts to fall below 99, I think that's a good reason to get out of it if it drops below 99. Good stuff, man. Happy for you. Thank you, New Way. Kevin knows I tend to start talking about charts and forget to pull up the charts and just leave you guys like wondering what I'm looking at. ON. Let's look at ON. So I haven't updated this one in about a week or so, but I can tell you right now what's going to stand out to me. You got this channel here. Let's see here. Is it trying to push out of that channel? Kind of sort of does, guys. So if it's breaking out of that channel, that would be a positive for it, because it's got a little bit of a narrowness to it, so it's losing that upward momentum some. But I wouldn't necessarily call that a breakout at this point. This one's hard to man, I don't know. I'm almost tempted to, let's see. Yeah, I would probably say that's kind of, yeah, I mean, I would probably say that's the candle, and it is actually breaking out. That's a hard chart to actually do. You can see I've marked this chart up like crazy over the years, but just looking at this one here, yeah, it's breaking out to the upside. I think that's positive. For me, if I'm playing that breakout, I'm putting my stop loss below 98.63 or so, just to manage the risk a little bit better, and just see how high it's willing to go. Again, you want to make sure that you're recognizing that overall the NASDAQ very overextended, very overbought, and it's just it could pull back at any time, and that's why you want those stop losses even on really good trades. AMD, yes, I could talk about AMD for a second here, because this was on my bearish watch list coming into the week. And why was it? You had this double top pattern here. So you have the first top here, you have the second top right here, and you can see it breaks down right below 116. Then it tries to come back and test that double bottom confirmation level, breaks down again, but it doesn't form a new lower low. So that was a positive. And then it comes right back up again. And now it's trying to break above that resistance level once again. But in the process of doing that, what has it created? It's created a cup and handle pattern. So you got the cup, you got the handle. It broke out of it on Friday, couldn't sustain that move though. And so you get a false breakout. Now it's trying to break out again. So above like 118 or so, I would probably even say above yesterday's highs, which would be like 118.85. That's where the momentum starts to pick up. That's probably like around 131 where it could go back up to. I like the chart. I think it reports earnings though, and you want to be cognizant of this. It reports earnings on, according to TC2000, August 1st. So I wouldn't want to be holding. It's kind of like the Tesla trade that I made last week. I had about a week window to be able to play it. I got out of it completely today. I took profit thirds, along the way. I would be doing the same thing with AMD as well, not wanting to hold it through earnings as a swing trade. I will, but I would maybe see if you can't get a pop from 118 to 132. Good chart. UNM. Rising trend line off of the March lows. Pull back to the support level right here at about 47. Bounces off of 47, goes up to 48. Could say that you got a little bit of a bull flag price action here for me. You got a lot of these right now in the market. I'm seeing bull flags everywhere these days. Yeah, I'd probably, let's change these colors on this thing too. Make them pretty Bob Ross style, right? Some happy lines in this chart. So we got some happy lines, bounces off of the 47 level. Like I said, I'd still think it's playable from a breakout level. I think 48.70-ish would probably be the breakout, and then a stop loss below this support level going across here, and also this rising trend line here, 48. The only thing that would, yes, 46.89. Only thing, it's reporting earnings on August 1st too. Unlike some of your big tech plays that can make some big moves like what we saw on Microsoft today or in Netflix, this one's not guaranteed to necessarily make a big move. So you might only get like, 3% out of it between now and August 1st. Just insurance companies, they tend to be a little bit slower moving stocks. Doesn't mean it can't have a big breakout, but just historically speaking. Black Mama, I am selling Tesla. Also spotted that trend line concerning holding long-term positions so I can take profits on the swing. Great job, man. Let's see. Got in at 88, so 98 is super okay. Perfect. HSY, I can look at that one. The Hershey Company. Trend line holding up well so far. It's right out of the gate. I would say watch this rising trend line going back to September of 2021. 233 is probably a good place where it might get tested at. I don't see a reason to hold it right now. You got a little bit of let's scratch that. I don't see the head and shoulders. I thought there might be a head and shoulders there, but it's kind of a stretch. Just a hard pullback going from 275 back down to like 235. Be watching for a bounce there, maybe even a possible long-term play there. Hershey's reports on July 27th, so you're only talking about 9 days away. I personally, for me, I would wait for even if it does touch this 233 level, I'd wait for earnings to pass before getting into it, because I think they may see a drop of revenue just from a political standpoint of late. So that's about it, man. That was good stuff, guys. I appreciate you guys joining me today. I appreciate giving me some good charts, some good feedback. AMD was a good one. What was that one? Let's see. We had FIS. That was it. FIS apps looks pretty good. Good job on coin, man. That was a great move there. UNM, some good thoughts there as well. We got the earnings reports coming out tomorrow for Netflix and Tesla. Those are going to be filled with some fireworks, so be on your toes with that. Make sure, if you're watching on YouTube, like, subscribe, and click the join button down below if you want some more of my market research that I do each and every day. You guys can benefit from that. That provides you with big tech updates and updates on all of the market moves a couple of times a week. Plus, you're getting some good watch lists as well. So check that out by clicking join down below. Thank you, guys. God bless.